All right, y'all. I'm playing. Um, what's going on, everybody? I have an updated Keltner channel strategy. So, I've been trying to find an easier way to do this, man. 'Cause I'm like multitasking and trying to work and trade at the same time. So it's been really hard to do things to the capacity that I would like. And I'm trying to just, like I said, this is all about my journey. So during the journey, you're gonna take several different routes, and you're gonna deter, go other places, and come back. It's all love. It's a part of the process. So you guys are there with me, and as I learn it, as I think of things, I'm just doing it. All right. So this is it's still the same strategy. It's just I mean, to me, it's I don't know. I've been having an easier time like keeping track of it while doing multiple things. So hopefully you guys enjoy it and you can utilize it. Same strategy, just a little bit different in terms of placement. So this isn't going to be a long video. I do have a little bit of a few live trades after this because I had some overage. So I'll show you guys visually what it looks like as well. So let's get to it. No more delays. And if you're not already, you already know what you should be doing. Follow, follow, follow the page. You better like, you better subscribe. I want to see thumbs up. All right. First five people to do the thumbs up, they get a hello or something. All right. I'm not giving anybody free money. So we're not there yet. All right. But when we there, y'all already know. But let's get started. All right. No more delays. All right, guys. So don't mind. Also, I feel like I always do these videos when I just get out of the shower, so my hair is all looking crazy. Lock Nation, y'all know what it is. I'm gonna be there. I'm gonna do this on every video because I just want y'all to see the progress. Okay, and y'all hear the hating in the background. That's family for you. You know. Um, but anyway, back to what we were supposed to be discussing. Updated, I should say, Kettler channel. So process is still the same. The only difference is what I was noticing is that you can actually still do same steps if the candle, as long as the candles are like nice sized candles, even if it starts from the top, and it actually makes it a little bit more consistent. So it is slower to find the opportunity, but well, I shouldn't even say it's slower. It's really not, but looking for a setup like how I have shown for you right here is kind of what you're looking for. And then, like I said, you're activating at that third candle, which would be that darkest green one. So first one crosses, and this is a nice size candle. You got the second candle, still very nice size, and it's still within the channel. And then the third one actually would have activated within the channel, and it just went down and did whatever. Okay, but as you can see, it continues down. So, strong entry on this one. The other ones don't matter. Okay. And just remember you're entering at the third second on the third candle. All right. Now, when I want to tell you on the third second, you don't necessarily need to activate it as soon as it says three. So you kind of want to be closer to the 2 second than the 3 second. So allow a little delay because sometimes you'll see like a last minute jump, like up or down, and that'll make a difference. Where then if it jumps up, you probably want to jump, you want to enter it at that point so it can climb back down on you more securely. Okay. And when I say jump up, I'm talking about in the parameter that you would want it to. So like you want it to be, you remember like that little sweet zone I gave you. So if I'm using this example, let me do it in white. So if we're talking sale, because that's what we're looking for, this is the good area. This is where you want to enter. Okay, I know it's on this candle, but I'm doing it here just so you can see what I'm talking about. So just use your imagination. All right, so this is the good area. This is the more risky area. So not necessarily bad, just more risky. And just remember anything outside of this can be risky as well. Okay, if it's close, that's fine. But if it's definitely outside, as it's shown on that third candle, obviously that would have been after activation. You don't want to jump in at that point because it'll snatch back. Okay, sometimes. All right. So everything's the same. The only difference is you are starting from the top, and realistically, this is what you want in terms of setup. So with that said, with my strategy, I only try to have 6 successful trades in a day. A lot of these you can do, or so six consecutive, I don't want to say consecutive, but 6 successful trades in a day because that'll put you in your goal. Okay. And I want to also add So this pocket option broker is not regulated. I haven't had any issues with this, but since I know I mean, you know, like when I was doing Forex, you hear the nightmares of not being able to get your funds. So I know I was talking about stacking up your account so you can trade larger. Just take it out every day, just so that you don't have any issue like that, because it's easier to catch it on the front end than, let's say, on the back end when you've built up so much and accumulated so much money, and then all of a sudden you are having trouble getting your funds out. Okay, but with that said, I actually created a new strategy with as it pertains to like your initial deposit and how you should be trading to kind of safeguard yourself. Okay, so you guys got it. Like I said, this is the perfect setup. In a perfect world, this is what you want it to look like. The one thing that I did add that wasn't on there is this zigzag. Now I don't really use this too much for anything, but it does help me to catch like instant reversal. So it pretty much taps it keys in on the high point and low point, which I mean, obviously you can see, but something about that when it forms as you're trading, it really helps me out. So, I mean, you'll see what I'm talking about when I take you through the live trade. Again, no special setup for it. I just have the zigzag there because it just helps me to make sure I'm going in the right direction. And obviously, if it's like consolidating, so I don't trade during consolidation, like strong consolidation. So if it's not forming over a period of time, I know to change out of that one. Okay, it just tells me, it's like a mental check for me. Okay, so let's keep it moving. Okay, so I just want you guys to see what I'm talking about when I'm like looking at these types of charts and how I hone in on, I guess, perfecting a process, and also just coming up with other things because realistically speaking, yeah, some people, I mean, they stick to one method of trade and they stick to that. Others keep at least, two or three. I mean, two to me is fine, but it has to make sense. So, like, if one of your methods is crossover, which is what I do, what I've been showing you guys is crossover, then the other should be zones, right? So, crossover is going from a sell to a buy period, bull, bull bear period, however you want to put it. But then you have your zones where you are expecting reflections or breaches of that zone. The reason why I don't like to deal with zones specifically is because it's hard to gauge like because I mean unless you have a currency pair that is doing a lot of bouncing back and forth and consolidation, and this is the best example I could really find, unfortunately. But if I was to I guess if I was to try to put a mark on this. So you guys know when I do zones, I generally do like I do the bar. Okay. So this isn't the high point and low point of the entire because obviously this would be the highest point. But what I'm saying is there's a ceiling there because I have two different points at the top where it meets, and then automatically I have a low point, and so this would be like my mini zone. Okay. So if you guys followed any of my other trades videos, you know you have to allow one to form and one to form on the bottom before you can gauge, hey, this would be my number two, right? Or my second point, I should say. So if the problem that I have with support zones only is because it takes so much time. Trying to get away from like taking forever. So that's why you want I use the crossover method because already in this these two areas that I'm about to highlight here. So one and two at the top and one at the bottom. You technically have what's that? One, two, three, four crossover opportunities. Okay. I'm not saying that they're all good opportunities, but there are four crossover two opportunities where on with this support zone we only have one opportunity in this same area. Okay. So this is why it's important to kind of have have a few methods here that work for you so you can be done because you don't want to miss opportunities if you can. I would just say to me support zones is not as efficient as my crossover method, and really it's because you really don't know, like I mean you can see here that it would have worked out and there's a bounce, but there could always be a situation where it breaches. So if you choose the wrong one, you're 50-50. Whereas if you're looking for particular setup, you're using all of your tools, you may be more successful doing a crossover than the support zones. But like I said, they both work. It's just you have to use your tools. So I talked a little bit about support zones before. I'm not going to go too much into it because that's not what this one is about. But what I want you guys to understand is if you are like doing different things, you have to know how to you have to understand the chart. Okay. And all it is just really looking at it. If you're looking at, hey, we have options on in terms of time frames now. So how do I know how long to go into a sale if this was to bounce back? So you have the answer here, but the where you get the answer is by looking at prior history, right? So if you can see where the number two is, I'm sorry, you see where the number one is, as you can see, each of these candles for me are 5 seconds because I have this as a 5 second clock. So if each is 5 seconds, hey, at least for 25 seconds, once it hits this zone, it's going to be underneath. Okay. Once it hits this zone for another 25 seconds, or you don't want to do too long. So to me, don't stretch out too long if you're basing it on seconds. Okay. But if you see that you at least have 25 seconds, which is really a decent number from my experience doing it, do it, okay? But you have to see it in the chart. Every chart's not going to look the same. So some charts you may see that same bounce back off of 15 seconds. That's to me too short. Stay out of those. Look for the ones that have a lot of history where, hey, if it hits the ceiling or the floor is bouncing and going back the other direction. Okay, you want consistency. That's what you're looking for. And then when you see that, then the time frame comes in the other place. Now, when it comes to support and resistance zones. I mean, if you follow some of the other videos, like I said, I discussed how it works, but you want one and one. So you want one at the top, one at the bottom. The second one is the one that you're going to it's up to you. Some people will allow a second one to form on both sides and then enter on a third. But by me trading on the second as opposed to, minutes and how, the Forex game was going on when I was doing the other trading, I don't have time for all that. So I enter at the second because I feel like, hey, if I get it, I got it. If I don't, it's fine. The only difference is if I'm going to do a support resistance type of trade, I'm not going to do a heavy, like, I'm not doing big trades. Okay. So save that for the crossover. But this is how that part works. Again, I'll try to show you some examples when I show you the live trade. I don't want to get caught up on that today. I'm just trying to get you guys to understand how the chart works and what parts should kind of speak to you. Okay. So this is the best one that I have for right now. And then if you continue with this, you see this is the two for the bottom. The two area is an area in this case. It's not one specific point. Okay. So if it's teetering and bouncing around at the bottom, count all of that as a two. That is a good indication that it's going to spring back up for a buy. But that's like I said, this is the downside to just focusing solely on on support zones because if you hit the number two right with a sell and you went into the two at the bottom for a sell, it's teetering around at the bottom too long, and I don't it's really hard to say, well, I guess if you allowed it to get to anyone, you would have activated at this candle because that's the closest to the line. Again, you're not looking for exact, you're just looking for closeness. So you would have activated here and then the green candle, the first green candle is 5, 10, 15, 20. And depending on when you press the button, I mean, it could have did well for you or it would have taken you out. It's really hard to say because that the zigzag is in the way, so I can't see how far down it went. So this would be a good trade on your end. It's just, depending on when you press the button and that timer, you would have either got it or not, but then it sprung back up, so you'd have been upset, right? But again, so potential two trades there. And then as this one goes only midway, you wouldn't have done any sale because it didn't get near your ceiling, and then it reversed through the zone. So now you're making the decision, should I do another buy? So you get what I'm saying? Should I do another buy or am I expecting it to travel down? Now in that situation, you should be using a larger clock time frame. So it's really you gotta figure out which one works best for you. Obviously, this is why you have the demo account, but I'm just giving you that tool just so that you know that, hey, that is something that I do. I'll try to time the breaches more than the like the reflections. But you know, it just depends on what I'm getting from the overall like currency pair. But this one is a bad example because this was the best one I can find at the time that I was doing this recording. So, you know, don't be mad at me. So let's continue on and get this everything started here. So the key thing that you guys need to do is pace yourself. Okay, pace yourself. There is no rush to any of this. This plan, I think this is the safest option when it comes to risk and reward. Especially when you're new, you want to give yourself opportunities to um, fail, right? Again, none of this is like 100% foolproof. You're going to get it. You're going to win. Like it's all probability. And if you stay consistent with what you look for, you'll have a higher chance than the lower chance. But there's always emotion involved. You always try to find something because hey, I got to do something real quick. So you need to pace yourself at how you climb up the chart. So I put this here for you so you can see it. And depending on what your goal is weekly, and this is a good starting point. I don't care what anybody says. Again, you have 7 days to trade, but even like if you're looking at that first column, you starting off with $5. All right, so $5 isn't any miracle money, but the thing is, I would recommend, you know, for people that are new to this, like man, put $25 in your account, start with $5. You can really, I mean, honestly, so this is 7 trades, and the reason why it's seven because normally just when I have those overage, when I'm showing you guys like the overage, that was based on, you know, accumulated account and I'm over that goal, so let me play with this money. But the problem was, you know, I mean, you win. So you, since I'm taking more riskier trades, since you know, I felt like okay, I hit my goal for the day. You end up trying to do too much, and you end up losing the extra as opposed to getting it. So you're not losing money, you're just losing extra money, if that makes sense. So at least if you control it, then I mean you can keep some of it, and it's more. I guess to me, in the long run, it's a healthier way to trade because to me, I think you just kind of feel better knowing that you have constant success, and then at some point you just like, hey, I'll stop. Or if you realize that you're doing trash, you're at least stopping, knowing that okay, I'm still like in my extras and profit in terms of my extras, as opposed to okay, I just lost the whole extra, right? So now the next day it's like, okay, I'm starting over from like a fresh trade. So that having some, I don't know, like having that in your back pocket to me, it makes you more confident the next day to trade and not be too nervous. Okay, so I know the numbers look great when you're doing well, but that's not going to be every day. You know, if you come in and you got an extra 75 or 100 and you're doing large trades, it's easy to blow two of them and now your extra's gone. But if you're kind of like being smart with it, then you're good, right? And it all adds up. So that's the key thing. So this first column I'm showing you, like even if you had extra $10, so if you had an extra $10, um, you know, instead of being using 50 of that, right? So let's say you have extra 50, take it out. So again, always deplete the account so you could, you know, you could take care of yourself, or at least start over, deplete the account, okay? It'll just keep you from doing dumb errors. Because if you keep money in there starting for the next day, which is fine, um, to me, you're going to end up using it accidentally when you first start. So if you have the patience and that discipline, I should say, to not spend what's there and you continue with your next day with that starting amount, then that's fine. But if you're not disciplined and you're like, man, I want to like triple and double, you know, double and triple this, then, you know, I would just recommend taking it out. Yeah, there's fees associated with withdrawals, but I mean, like I said, you're not really worried about it if you're doing well, right? So key thing is if you're first starting off with this, like I said, put $25, put 40 in. If you're doing 40, I would just say start off maybe with $10 trades. But if you're doing less than 40, do five. So if you start off with $25 and you're doing $5 trades, you have five chances to deplete that account. But if you follow this to a T, every day you're making $125. So let's just say you bomb one day, you only lost $25, but you gained, you know, five times your investment. So you know what I'm saying? Like you're not really in a loss. So it's all about controlling your losses, which I'm trying to make sure I'm doing good habits going on in the future, especially if this is going to be something I'm planning on doing like 100% of my time. Can't be risking yeah, going broke trading, right? Because I just assume at some point you're going to go through like a rough patch, and I mean it happens all the time. Happens with when I'm doing forex, and you just have to kind of revamp, and which is why I literally videotape everything I do, and I have all my trade secrets written down that I share with you guys. So I guess it's not really a secret. Shout out to the 28, you know. But but anyway, whichever your goal is, start off there. All of this is good money because again, you can trade 7 days a week. $900 a week is good money. $1,000 a week is good money. Like, come on now, like you guys get it. I don't have to tell you. And all of this can happen honestly from just starting with $5 per trade, starting with 15 once you're a little bit more comfortable. And then, of course, you just don't do the extra trade. So now you're at that 6, bump it up to 20, bump it up to 30, bump it up to 35. And really, you can stop wherever you want to. But I mean, once you get into these two areas here, like that's great money, man. I don't care what anybody says. So, um, follow that. Like I said, on my end, I want you guys to understand. I just want you to look for the best 6 trades, the best 6 trades. And then when you're overage, you can do whatever, right? But the best 6 trades are what you're looking for, and you don't enter unless everything lines up. And I promise you, that is not a long process. It's really not. Maybe an hour and a half, but at least you'll have that hour and a half and have like success as opposed to trying to rush it and you're winning, 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 losing, winning, losing, losing, winning, losing, you know, and then it ends up, I mean, it ends up a little bit shorter on a time frame, but to me, it just feels better to be able to win and be done. I don't know, even if it takes some time. Because at the end of the day, we all have, most of us have 9 to 5s, and you know, if you put it in perspective, you know what you make after a full day of work. So if I'm telling you you can make more than what you make at work, by just, you know, putting in 2 hours or less, yeah, I don't see why you would complain. Okay, so let's get to the live stuff. I don't want this to continue too long. All right, we are ready for the good stuff, guys. All right, so as usual, I'm going to show you the trade, and then I'm going to talk about it. All right. So, as like I told you guys, so as you can see here, I'm trying to practice what I preach. So you're going to have overage. All right. You're going to have overage, or might not have overage. I guess depends on how you're going. But either way, if you're close to your goal and you're not at your goal, stop. Okay. So if your goal is $100 and you're because like I said, depending on how you're doing, you never you don't get your money back in full. So if you win some, lose some, but you win more than you lose, you're going to come up with some type of number, right? Because you're at most going to get 92% of your return. So if you are under and you are, let's say my goal is 100, my goal is $90 a day, which is good money, 77 days a week. Okay. And let's say you're at 82. Should you go back in for a trade to get to 90? No, it's stupid. Don't do that. All right, because you have to put it in in perspective. You have $82. You're about to trade $10 to get $8 to get to your to your goal, which is only $8 away. If you lose it, now you're further away. You know what I'm saying? So now you went from 80 to 70, and now your goal is now it's like you need to trade again. So that happens. Okay. So no, in those situations, put it in perspective. Stop. Okay. If you're over, then let's say you're over 20 or 30 or $40. Should you put up the whole 20, 30, 40? No. Start with $10. Okay. Trade $10 and out of the $10, trade 5. Okay, I just showed you how to make 135 just by starting off with $5 trade. So yeah, you do 7, but if you wanted to do that, you can make that extra 100, and then when you get to that extra 135, then you take a 15. You get what I'm saying? So that's how you keep the ball rolling on this. Okay, but anyway, let's get to it. I'm sorry, I'm talking about other stuff. Um, Let me not delay. And then, like I said, if I say anything, I'll point it out. But this was an ugly time. As you can see, we're on the 15th hour. I'm sorry, I start that video over accidentally. We're on the 15th hour today, so whatever time that means to you. It's generally not the best trading time. It's kind of slow. Market's closing and everything. So I have these arrows here for a reason, and I'll let this one close out before I discuss. Okay, so boom, confetti. Cover your eyes, everybody. Don't want you to get poked in the eye. So it wouldn't be my fault. Too close to the confetti. All right. So I stopped it on the 3rd second. Actually, let me, because I want to reiterate this. I'm gonna stop it here. Okay. So these arrows. So first thing that we're looking for, you guys already know. You already know. All right. So you look for. I probably need to back it up some actually. Hold on. Let me do that. So I'm gonna back it up first. So first thing that you're looking for, because let's talk strategy first before I start talking about everything else. So I got one candle form, which is this one that you see here. So already again, nice strong candle. Is breaching that middle zone. Not the best, but it's good enough. Got a second candle. Now that's in the sweet area. Now this third candle, I'm waiting to see if it is going to go too high. Because if it goes too high, I'm gonna stay out of it. I always look for some sort of bounce back, right? So now it bounced back some. Now remember, so the clock just turned to 3. So remember, I told you guys when I told you guys to click in at the 3rd second, but I guess what I need to specify is I don't want you to click it exactly at 3, because if you're at 4 and you're trying to time it for the 3rd second, it always skips down or jumps up or something. And if it does that last second, it's gonna mess you up because then you like, man, if I would have just held off for a little bit closer, a little bit longer, I would have stayed out of it, or I would have jumped in at a better position, or whatever the case may have been. So be more so on the second, closer to number 2 than 3. Okay, so as you can see, you see, you see where I came in. So I came in a little late. I'm gonna move this one more time so you can see it. So as you can see, it activates at the 2, but that's because I haven't played. I told you I gotta get your video games or get your reflexes up. But since I don't have anything to play, I think mine are a little slow now. But either way, it worked out. So yellow, these candles are color coded, and you'll see as I'm going through this for a reason. So the first one is a yellow because it's not the strongest. Like I said, it's not set up like the one I showed you. The one I showed you is perfect. Literally, that's how you want it to look. Okay. The one next to it looks like how you want it to look. The only difference is the channel's going upward. So that's why I wouldn't have jumped in that one anyway, because I'm trying to respect the actual direction of the channel too. So what I mean by that is you can see that this is starting to climb up, and even though it's leveling out, it's not necessarily going down at a point that I like. So again, you'll catch it more so in real time. As you can see with this one, it's not going down anymore. Oh, actually, perfect. You can see it. So it's not going down anymore. This is how it's going to look in real time, but you can see that it's inching up. If you look at the bottom of that channel, you can see that it's climbing up. Okay, so you have to be able to see little details like that, which is why I say use a laptop, desktop, not your cell phone. Okay, so it's color coded like this for a reason. And because of that, boom, we win. Now, what you also notice, because I didn't talk about it, and I'm sorry, your indicators, because we always look at our indicators. So I guess I'll touch base on that. But for those that are new, you got the MACD. We got an early cross. I'm fine with the early crosses now because of this, because I'm jumping in earlier. So before I was like, let the alligator mouth open up a little bit more. I don't care about that too much if I since I'm starting off, since I'm looking for like this, okay? And then obviously underneath that, it's also pointed upward. And again, I didn't really highlight this, but I started to again, you could change these numbers at the top if you want to. I changed it to like I said, one of my guys put me on with this, and I didn't even know that you can change the range because initially it's 80-20, so 80 at the top in the blue, 20 at the bottom, and essentially when it reaches those areas, it's a chance of a retracement. So what I started to do is, and I use it more so for the kickbacks, or I'm looking for it in the sense of, hey, if I'm doing this motion, the same setup, but I'm at the very top, then I'm not going to jump in because I know it's going to be stagnant. So I use it to kind of make sure that I'm in a good spot. So I like to be kind of in a, if I'm buying, I like to be near the top, not all the way at the top. If I'm selling, I want to be near the bottom, not all the way at the bottom. Okay. I don't want to be in the middle anywhere, because it can go either way. So just take that, however you want to. But, but sorry, I'm over here burping. Let me keep it rolling. Sorry, Wingstop, free promo. And fries are salty. Hopefully they don't hear that part. Don't no more free promo. They're gonna get mad at me. The people know what it is when they get Wingstop. I had Wingstop once. I had to go to the. We had to end up going and rush to the. Yep. I had one back. I don't know if I was visiting my mom or if I lived with her. It was a long time ago, though. Obviously. Had Wingstop and felt like I was having a heart attack or something. Ended up having to go take an ambulance to the hospital, and the people like. They're like, "What did you eat?" And as my blood pressure was all up, and I was like, "I had Wingstop," and they was like, "It was the Wingstop." Then they like shut the door on me and drove me off like it was a case closed. I'm like, "Man, y'all sure?" Because I've had bad food before. I was still young at the time. But anyway, all right, sidetrack. Sorry. Last chart I showed you, I didn't really see any good zone. Actually, let me double check before I keep going. So if you were so because I want to show you guys support zones, if you guys are looking to add like support zone method, again, you have to find out what's best for you. But the way that you would gauge this is by finding the first high point and the first low point. Okay, so they're both one for a reason. So in real time, this is what you see. You wouldn't see whatever's going on the right of that area. Okay, so this area does not exist yet. Okay, clearly over to the left, it's been going straight downward. So if you, I mean, depending on how you're looking at it and what's going on left of that, you could say this is a zone, but this zone is breached and it continues here. So if I'm looking at it in the time frame that I'm looking at it, I missed all of the action, right? The only action that I could have got was what I pretty much put in for, which is here, right? So it would have doubled up on my strategy. So there's no opportunity, right? So the way that you find these situations are you have to see. So one, this is not a good chart for that. You honestly need to find. You have to do it in times where it's like really volatile, where there's a lot of up and downward movement. If it's a lot of consistent downward movement, then you're not looking for bounce backs. You're looking for breaches. And when you're looking for breaches, you need to have a lot of consistent information. So I can't really see anything left of this area to give you. But if I'm looking for a breach zone, like I said, this would be a zone technically, this area that I just showed you, and you have to gauge how long it sits in that zone, right? So all of this is ugly, right? So you personally, even if you had a zone showing over here, you probably wouldn't get too involved in this. You want something clean, like how these look, where it's only there for a few seconds and then it's moving. Okay, it's not like getting stagnant. So when I'm looking at zones, remember zones, I don't. It's no specific price point. I just look for the formed candle, the bottom of the formed candle if it's red, or the top if it's green. That part has not changed since Forex. Okay. Um, Let me do that cleaner so you can see it. And what you do is you want to let it, so in real time, without that zone being there, you want it to at least tap 2 times in that same area to be able to identify it as an actual zone. So one and one, you don't touch. Okay, that just gives you the initial basis of where your zone is. Okay, so one and one don't touch. And that first area to the left is now, we're not even paying attention to it because we found an actual working zone. All right, so let me actually do this in real time. So, so as that top one, all right, so as this top one starts to go back down, now we're looking at a point two. So in real time, you have two candles that touch. Okay, so and we're considering the wicks now, okay, because we're doing second trades. So you got that first wick here, then you got the second candle there touching. So this is now officially a zone. And it's if you wanted to take that risk, you would look to do a buy just as I did a buy using the strategy. But the way that you come up with the time frame, again, you're focused on once it touches twice, how long does it stay there before it goes up? So touches twice. Once it touches twice, in a perfect world, you would be able to get it right on the mark. So realistically speaking, you would jump in on this candle. Okay, like I said, I'm not gonna sit here and lie to you and say, oh, you would know to press it there. You wouldn't. It will go form another candle, and it's gonna do whatever silly, crazy stuff. And then as it comes back down, you're gonna activate at the bottom, like here. So somewhere near the bottom, it's probably not gonna be at the exact bottom. Okay, and what you're looking at is how long after that arrow, that first green candle, does it stay above that area? 1, 5, 10, 15, 20, 25. Again, 25 is a good clock for me. So, hey, if it's there for at least 25 seconds, I'm going to gauge and say, hey, if it does the same thing again, I want 25 seconds, right? So, regardless of how you look at it, you would have got it. But if you were like the eager type of person that says, hey, I'm just going to jump in as soon as it touches it. Okay, you more risky, like I said, use less money. But if you wanted to kind of give it a test, you would say, okay, so this would be the first touch of the area. Again, it's just the area, it doesn't have to go through it. This would be the second one. So if you timed it and you say, hey, I'm gonna take my risk and jump in on the second one, then that's fine. But if you're me and more, don't like to lose, you'll jump in on the third one and you would do the buy here where you have 1, 5, 10, 15, 20, and clearly 25. So regardless of where you jumped in, you have enough time where you would have won this trade. So that is how that works with support zones. Again, it's risky because sometimes it will continue down. So you shouldn't always jump in as soon as it touches. You should allow it to kind of like touch in the area a few times and then jump in. Me personally, I will wait the second time, but again, we're talking less money, not larger trades. So if you're doing that first tier and you're at your $30 trade, this should not be your 35 trade. This should be your $5 because if you lose it, who cares? This is just giving you cushion to wait for like that setup of the normal trade. Again, everybody does a couple of things when it comes to this trading game. They don't do the same thing. Okay, so let's go on. I won't waste your time. I don't know if I even have many of these, which is why I was staying kind of a long time on that. So this is still the first trade again. Started off with $10 that we're willing to give up. So you only trade 5 because I want to give two opportunities and hopefully go up to the 30 mark, which I was not able to. I gave up because it was just looking too ugly and I started doing dumb stuff. So I'm like, I'm good. So this is the second trade and this is color coded as it is for a reason, and I will explain why. Okay, so let me back it up some. Okay. So, this is the exact third second of the third candle. All right. So the good thing that I like about this one, there's a doji. Okay, doji, remember, means neutral candle. No, it's obviously no clear direction one way or another, but it's a good sign of a reversal. So we got strong candles in red, and then they are followed by a doji. Okay. So so initially here you can see, so the zigzag obviously is telling you, but there's an upward trend. So upward trend, zigzag is going upward, the channel's going upward. It's starting to curve out into a sell because of this motion here. And I wouldn't have jumped in even though this looks good because it's not, the overall, this is stronger. So again, you're looking for the best three or best 6 trades. Okay, so this is too strong. I don't feel comfortable going against it, so I'm gonna stick with the direction of the trade. All right, so that is why you would not jump in. All right, so you look for the 6 best opportunities, not every opportunity. Okay, so the green one looks good. Now, the yellow one is now getting smaller. Now, as you can see as well, my channel is starting to get thinner. So would I would have done this one earlier in the day? No, this would have been one I stayed out of. But what do? Hey, this is only $5. I'm $5. I'm at 15 or 14.60. So I'm fine. I'm fine taking this risk. If I lose, I just start back over. Who cares, right? So, but I took it, and process worked. All right, not the prettiest example, But again, we have our initial candle starting. Um, we have our initial candle starting underneath and breaching. So that would be our one, the second, third, and honestly speaking, even if you followed the last process, this would have been, or yeah, this would have been one that you jumped in because the majority of the candle still is in the on the good side. So personally, like I said, that first example that I showed you is kind of where you want to be with these things, where you have a strong candle, kind of honestly set up how this one is. Strong candle, another strong candle, and then a decent area where you have wiggle room to the bottom of the channel. Okay. The only issue is, like I said, it's curving downward, but again, we have too much of a curvature going upward. So don't trade against the trend. Okay. You can't rely on zigzags, so don't be like, okay, well, I'll do this when the zigzag forms, because as you can see, my zigzag has not formed yet. All right. So the zigzag, you can't wait on a zigzag all the time with this. Again, this is about a crossover opportunity. So technically speaking, you want it to be down to then go back up. That's the purpose of the crossover. Now, sometimes the zigzag will form on you, and it just gives you better reassurance in terms of timing, but that's not a main thing that you're looking for. So, in terms of zones, I don't have any. Okay, so no zone has formed. Oh, you have a zone down here, and then you have this zone here. Okay, but I don't know what was going on the left of this, so you at least you have your one and one. So hopefully you guys can at least identify this. If this was one that you kind of sat and babysat yourself in, and you can see if it went continue to go down here or if it bounced up, but just know that if it goes up, that it may breach since the lower low is there, the low end is higher, right? So you got low, you got high. If you have a high high, that's a symbol that lets you know that it's going to be continuing up, right? So let me just show you. You guys are getting extra lessons that I did not plan to cover. I tell you guys, I just love to talk. This is supposed to be a quick video. So you got a high point here, you got a low high, you got another high that is now getting low, and then you got a low point that's getting low, right? So high high, low lows, I don't like it because it sounds confusing, but you guys see what I'm talking about. We'll get to it more. Let me just get to the actual program, all right? So let me erase some of this mess. Guess this is the easier one to talk about high and lows. Um, so what you're talking about when you have low points and you have high points, all right, if the high points are continuing to get high, you're in the trend of going up. If the lows are also high, so this is a low high, a high low, sorry. If the low points are getting high, that's giving you that same impression that you're in the upward trend. So all of this is showing upward trend, all right? So you see the high highs, and then this starts to, I mean, I don't know what's happening here. This can still be growing. Who knows? But if this was to be stopping here, now this is a good sign that it's going to reverse, which we also see here, because you see there's an opportunity for a cross, or it is crossing, it looks like, or close to. And then remember that 94 is being touched. So that 94 is going to let me know that there's about to be some sort of reversal, okay? Or at least some sort of stagnancy. So again, that number can change. I just, to me, most of the time they're getting around 94 and 5 before they like immediately snap back. So there's no trade here. Obviously, there's no crossover for me to work. We're just going over this and passing. Missed opportunity already. See what happens when you go to the wrong chart. So now I'm trying to see if there's something here. So if I would have been here earlier, this would have been a sale. Okay, this would have been the one. This would have been a two, and then the third one would have activated here. It's hard to see, like, I mean, we don't know without the timer where it would have been, but this would have been a good candidate for a potential another win. Okay. And this one you would take, honestly, because this one is a little bit more curvier and going sideways than that last example. Okay. The last example just started to curve. This one's been curving a little, okay, for a little while. So boom, yay. So we're two up, right? So 19-ish dollars. All right, I forget where I left off. 19, yeah, 19 and some change. $20. I forgot his change associated with all this. So $20 up. Um, so color of candles, right? Matters again. So first candle is a doji-ish. Yeah, it's doji. It's a green. So again, doji don't have to be perfect. They don't have to be a flat. It can be neutral size. Like as long as it's kind of in the middle, like how you're looking at it, it lets me know that there's a reversal. I don't care what color it is. It lets me know a reversal. That one I considered my first one. I have it yellow just because it's not the best first candle. Because again, I want a strong motion. Because it could just be, it could do that and then go back red, right? Um, so, but number two was a nice strong size candle, so that's why the darker green is there. And then number three at the third second, if I would have stopped it at the right time. So again, pay attention to the time. So that's 4, 3, delay, and then allow it to get to closer to 2. I don't know if you saw that quick little, drop, but it dropped down a little, then it shot back up. So should we wait to 2? No, because you wait to 2, and then the brain and your reflexes and age kick in, and you end up activating it on 1, and then you're right where this is, right? So so be on the later end of the 3. All right. So if you did it anyway, it would have got you, as you can see, anyway, it would have worked out. But just trust me, later side of the 3, closer to 2 seconds. Okay. So you got that. Now this one is a good one for zones. So you got 1, you got 2. So, or sorry, you got 1 bottom, 1 top. So again, this is another one. If I would have jumped in, I could have explored the option of a buy. The reason why is because this channel's climbing up, right? Okay, and in real time, like you wouldn't see it like you're seeing it right now. So in real time, it would still be kind of doing a little bit of a curve. Again, you are activating, you're paying attention to what the chart is telling you. If you just pay attention to the chart, I promise, this is not that hard. Okay, so first one touches, or I'm sorry, you got 2 touching here, okay, to give you the indication of, hey, there's a floor there, right? So, I mean, you'll see this obviously in real time, but I'm just trying to get you in the habit of trying to activate on that third candle when you're doing these support zones. So you got 1, you got 2, and then where do you start to do your time? Again, is on the third one because chances are that's the one that you're going to activate, for the next one, right? That's the chances. Okay. So how many seconds? We got 5, we got 10, we got 15, we got 20, and we got 25, which would be all above that area. So obviously we're talking a buy. All right, so this lets you know that whatever I'm doing should be 25 seconds. How do I test it? So you got another cell in here. This is already formed, so you don't care because you're looking at it. So this is 1 here, this is 2 here, this is 3. Again, this is just a number. So number ones are already there. Okay, it's the number 2 that you have to find. Okay, so again, on the third one, how long does it stay underneath? So I'm gonna do that in a different color. So on the third one, again, we're not gonna consider the first candle. So we got 5, we got 10, we got 15, we got 20, and we got another consistent 25. So yes, under a lot longer, but you don't want to risk being in there too long. Okay. So that is how, again, we have formed this idea of 25 seconds. So if you, in real time, do this again, the first candle touches your zone once. Do I want to jump in there at that time? No. Let me test it again. 2, test the second time. Okay, is there a second time? It's looking similar to the other one. Yes, it's strong candles, but I'm not 100% certain. So what I do, I don't take the largest risk. So we just do whatever number you're comfortable with for a buy at that third one, and you time it for 25 seconds. So 1, 5, 10, 15, 20, 25. So you would have won that trade doing a support zone. Okay, doing the support zone method. So I'm kind of giving 2 different methods. Okay, do you jump in to try to bounce again? No, you don't, because the zone, you don't have this ceiling has been breached, so that doesn't matter anymore. Okay, for right now. So the next high point is here. This ceiling becomes a floor. right? So are you seeing how this works, right? So you don't again, you're not timing it to you're not assuming that it's going to bounce back down again. You don't get greedy. Okay, that's the dumb thing to do, and don't try to buy, because just don't, okay? Yeah, it would have worked out, but it doesn't always work out that way. So don't get greedy. Just kind of allow things to transpire like they need to, and give yourself information. If you do that, you would have jumped in kind of at the same period as I did with the time in the turnaround. So you have, I mean, we already talked about it. You got one here touching, you got two here touching. You would have jumped in on three, and then your 25 seconds would be one, 5, 10, sorry, 15, 20, and then if I let the clock keep playing it out, I really like the top, guys. I swear, I promise this was supposed to be a lot faster. So this, I mean, depending on where you would have activated around that time. So as you can see, that 5 seconds was up. Okay. So last two examples, I promise. And hopefully you guys are appreciating these lengthy videos. And just so you know, I mean, like I say, you can pay attention to the time frame. That's the 15th hour. If you're looking at like total time frame on these trades, it's not that long. But again, these aren't going to be big numbers because I'm not doing that anymore. I'm trying to like secure my extra as opposed to keep, I'll do good and win it, or I'll lose it all and then I have to like start fresh every day, where then I can, every day if I'm starting with like more of my extra, I'm more comfortable with my trades because I'm like, man, I got this. I got more than what I'm is supposed to have essentially. So so this one I have this. So this is I think when I started to try to stop trade because I was doing too much. All right, so um again, sometimes you're just tired. You try to get all this stuff over with. So let me go back to the third second. All right, so what do you notice? We are clearly in the downtrend. So in a perfect world, or in the beginning of my day, I would not have done this. This is just completely risky. Okay, it worked out as you can see, but it's okay to take risky trades because you got to risk money to make it. You just control what you're making. So I bumped up from the 5 to the 10, um, 20, 10, yeah. So jumped up from the 5 to the 10, and I think this is kind of where I called it quits because I was doing dumb stuff. So first one is a good candle. The only thing that why it's like highlighted that color is because it's going outside the channel. As you can see, it's going outside the northern channel, then it snaps back to then form that second candle. So let me just go into it so you can see it in real time. All right, I'll just play from here. Sorry. So it snaps back, goes back down. So the second candle's kind of, it's kind of down there. So realistically, like I said, you would stay out of this, and then the third candle is really at the bottom. Okay. And then I clicked it. So if I clicked it a little bit sooner, it would have been a little bit further down, like right where it is now. But I said reflexes, tiredness, whatever. But at the end of the day, process always wins, man. Take that process, jumps back up to where it needs to be, cashes out, and we're good. Okay. So not the best example, but I'm just trying to show you guys how it's used. Again, practice, 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 practice makes perfect. It's not about being 100% with all your trades. It's about being efficient. And I think with this method, you give yourself more wiggle room. Now, what I do want to tell you before I get out of this, um, and with whatever you're comfortable with. I don't. So this Euro NZD is it moves a lot. Actually, every NZD one can be a little bit crazy. The other one you want to worry about is Euro and then the TRY OTC. Remember, you should be doing all OTCs. Those ones they move a little while. There's one more that I can't think of what it's called. It's like MTN or something. It's not on this list right now from what I'm saying, but you'll know what I'm talking about. So again, remember one of the key things that I talked about when it came to this, if the currency pair is like jumping all over the place and doing a bunch of wild stuff, like either favorable or not, don't get involved. Like you want like some sort of consistency. If it's spiking every once in a while, that's fine. But if it's just like all over the place, I can't promise it'll work. Okay, so find something better. All right. So I think that's it, man. I think that's it. I couldn't find anything. I was trying to look for it, and I'm still trying to find this one that I don't like. So yeah, I just kind of gave up at this point because I feel like I was doing dumb stuff, and I don't like to overstay. So until next time, guys, follow, like, subscribe. Let me know if you need something. Hit me up. If you know me, if you don't, look out for these videos. And I always appreciate you guys. Continue to support the channel. Thank you.